Hello, everyone. Welcome to the Dynamic Allocations 101 webinar. Thank you for joining us today. I'm Sandy Main, and I work in product marketing here at Sage Intacct. I'll be your host for today. Today, we're going to provide a brief overview of allocations in general, what they are, and the types of questions you can answer with allocations. We'll provide a comparison of the allocation methods that we have in Sage Intacct and use cases for each. Then we'll demonstrate dynamic allocations in action. And we'll wrap up with the benefits of dynamic allocations for your business. Before we start, I'll just briefly go over a couple of housekeeping items. If you have any questions, feel free to type them into the Q&A box at any time during the presentation. We won't be doing a live Q&A today, but we will respond to your questions on the Sage Intacct community within a few days after the webinar. We will be recording, and we'll send you a link to that recording as well as the slides afterwards. Now, I'd like to introduce you to David Abel, Principal Solution Consultant at Sage Intacct and an allocations expert. He's going to show us how dynamic allocations can help you get a true picture of performance in your organization.
Thanks for the introduction and for also teeing the presentation up for today's discussion on dynamic allocations. So what exactly is an allocation and why are we calling it dynamic? Well, first of all, this term allocation often means different things to different people. I, in fact, once asked a prospect about their requirements for allocations, and they thought I was simply referring to the coding of an invoice across certain GL accounts and dimensions, otherwise known inside Sage Intacct as departments, locations, projects, programs, etc. However, in Sage Intacct, while it's true that allocations will create and post entries into the general ledger with these codes, the term allocation means so much more. In fact, they can be transactional or dynamic, depending, of course, on the use case that needs to be solved for. Let's take this pie chart, for example. This is serving to depict how much expense or revenue will be distributed across certain projects. So basically, an allocation is the process of spreading or shifting costs and/or revenues elsewhere within the organization. Now, why would we ever want to do this? Well, maybe it's to gain more accurate understanding of the costs and profitability in order to make more informed decisions, or to manage and improve the usage of shared resources. Perhaps we want to determine how certain programmatic and/or organizational expenses will be paid for. These are just to name a few. In addition to spreading the costs or revenue across GL accounts, however, you may want to incorporate categories for these transactions. That is to say, establish dimension focus. For example, we may want to track by department, or project, or fund, perhaps by sales region or products. All of these dimensions can be assigned to the resulting allocation journal entries. Now, after you have successfully defined and generated allocations, what questions can be answered with the results? Let's consider these, which again are only a few examples. What are the true costs of our lines of business? Which projects are losing money? Are we pricing for profitability accurately? What would happen to profitability if employee benefits increased by, say, 10%? Should we hire in Department B if we plan to grow by around 30%? What is the full cost of a new employee? Now, I'm sure if given the time, you would easily be able to come up with your own benefits from having fully loaded costs reflected by programs, departments, etc. And again, this also applies to revenue distributions. Now, for comparison purposes, let's discuss the transaction allocation first. This is core functionality that allows you to have some basic allocation capability. You simply create a code and establish the spread that you would like the system to apply to a transaction. Then on the transaction, you select that code. As you can see here, we're applying department allocation 120 to this transaction line. Now, the amount entered on the line will then be distributed according to the defined transaction allocation. In this case, it took $8,559.59 and spread it across department A, B, and C according to the predefined percentages that we established for this allocation code. Now, you can also see this illustrated here as well. These can be percentage-based, as in this example. They could be what we call exact amount or absolute, or they can be fixed amounts with over-under logic. Now, Let's contrast this with dynamic allocations. This is functionality that requires an additional subscription and will take your allocation capability to the next level. Here, you can allocate revenue and expenses based on complex business drivers to deliver true performance analysis. For example, you identify a source of transaction that you wish to distribute. Maybe in this case, those are benefits, fringe benefits. Next, you define a basis from which to spread those transactions. Let's say salaries by program. After that, you configure the system to post the results. Benefits by program to a particular general ledger account, for example. Now, the end result is a true picture of your fully loaded program costs for salaries and benefits. So the difference between transaction and dynamic allocations is that with transactional, you pretty much know how you want to allocate the breakdown and it stays fairly static. But with dynamic, the proportional breakout is derived after the fact. These are more periodic allocations and the basis can be driven by both financial or statistical amounts. For instance, we can do it by square footage occupied. Now here we will discuss a customer example of how dynamic allocations help them become not only more efficient, but more robust. Before they implemented this feature, they had a 5-step manual process. First, they had to manually extract the data from the general ledger. From there, they had to manually calculate the basis. They put all this into Excel, imported the general ledger balances back into Excel to calculate the allocation, and then finally they had to extract the result and import that back into the general ledger. Before they implemented dynamic allocations, they only had 2 allocations using only 1 allocation method, and it took them over a day or longer each month to process these transactions. Now, after they implemented dynamic allocations, they were able to put into, or basically configure 14 allocations using 2 separate types of allocation methods, posting those transactions to what we call a user-defined book or a separate ledger for allocations, more on that later. And it also gave them the opportunity for additional allocations and more precision. And oh, by the way, now these allocations run in less than 10 minutes. Okay, so on the previous slide, we talked about using dynamic allocations to spread benefits according to salaries by program. What are some other use cases? Well, maybe we want to look at product or service profitability. Perhaps we want to, as an example I already showed, look at the way we can allocate staffing and benefits according to some allocation basis based on dimensions. Maybe we want to take shared overhead expenses such as occupancy, utilities, etc., and spread the transactions that way using either, again, amounts or statistical amounts, financial amounts or statistical amounts. Taking indirect costs for grants, this is a nonprofit example. Maybe we have investment earnings that we want to spread. Maybe you have an endowment perhaps in the not-for-profit world. We have endowments and they need to spread the gains and losses, the fees, the income based on some predetermined basis, whether it be their share in the cost pool or maybe some unitized measurement of the endowment overall. Okay, so now that we've talked about what's possible, let's take a look inside of Sage Intacct and see it in action. Okay, so here we are inside the Sage Intacct environment, and we are on a dashboard. And what I'm going to do is take you through the results of a dynamic allocation that we have previously set up and have the system generate for us. So here's a report that's showing on a dashboard, and it illustrates the concept that we were talking about earlier about multi-book, and that you can use this multi-book concept to track transactions outside of your actual or accrual book. So for instance, what you're seeing here is a report where we decided we wanted to allocate some fringe benefits and salaries based on some dynamically calculated percentages. Now, before I really get into this, I want to paint the picture of exactly what was the use case of what we were trying to accomplish here, and then we'll get back to here and talk about the results, and then take you back to the actual dynamic allocations and some of the other feature functions that are available within that application. So I'm going to bring up here a spreadsheet, and the concept here was that this organization, they have salaries and they have benefits, and some of the salaries that they book go right to executive or administration. And then other salaries go into a 999 or a shared program account code. In other words, they don't know exactly how they want to allocate those salaries yet because they want to base it on hours worked against a program or a grant or something along those lines. In this case, we're using a program. Okay. So as you can see here, we have a timesheet, and this time was entered into the system. For instance, Claire Danes, she worked a couple, basically 20 hours against program 100 and 20 hours against program 110. Heidi Klum, obviously her hours are spread between two different programs. Blake Lively, Ryan Reynolds, the same. So what you can do within Sage Intacct is you can capture this in the time and expense entry module, or you can simply upload these into the system as statistics, because within the dynamic allocation engine, you can allocate your cost pool based on both financial and statistical data, if you recall that conversation later, or earlier, I should say. So here we have the hours. All right, so keep that in mind. I think we had about 160 hours. Okay. Now over here on this tab, we're illustrating that they brought in their salaries from some outside agency. So maybe it was ADP or wherever they're calculating their payroll. Sage Intacct has the capacity to integrate with a number of different payroll systems, or we can simply upload that information into the journals. And what they did here is they uploaded the salaries to the identified programs that they knew about, which was executive and administration. And then $5,000 of it was really geared towards a shared pool, because again, we're going to allocate this based on the hours worked against the program. Now, what they also did here is they booked their benefits in the same entry, right? So the debit to the salaries and the debit to the benefits, right? And again, that went to a cost pool, because what we're going to do after we allocate the salaries is we're going to take another allocation and we're going to allocate the benefits based on the salaries by program. So it's a tiered allocation we're going to look at here today. And I'm just booking the credit to an accrued salaries payable account. So this was all done beforehand. So this entry is residing in our system right now. And this really illustrates what's about to happen, what you're going to see happen in the system. So over here, if we were doing this manually, we would have to go out and, as I mentioned earlier, you have to manually produce the basis, right? So now we got to take all those hours, we got to put them into a spreadsheet, we got to do something like I did here. I got to calculate all this out, right? So I'm going to add up my 60, I'm going to divide that by 160, come up with 37.5%, so forth and so on, until I come up with my percentages. Then what I'm going to do here is I'm going to take my salaries, and I'm going to allocate those salaries out by the percentages that were calculated with this basis, right? So here was the original entry, and I'm only interested in allocating this $5,000 here, right? Because the other ones were already booked to the 220 and 299 accounts. So I'm good with those. I'm good with those accounts. So the 999 account, that's going to be put into, or I'm actually going to take that out of that account, and I'm going to put it back into the appropriate departments according to the percentages that we calculated here. And that's what this green box represents here. So within the system, you're going to see that the dynamic allocation gets generated. It goes and it finds the $5,000 sitting in that shared cost pool, and then it'll take it, reverse it out, and it'll book it back into the appropriate program accounts based on those percentages that we allocated, or that we calculated. All right, so it took the $5,000 and it created this breakout here, and of course it's going to reverse it out. Then what we want to do is we want to say, all right, now that we have our salaries that are distributed, right, by program, and we were able to do that by a statistical measurement based on hours by program, now let's add up all our salaries, come up with the percentages of each salary per department, including the 299 and 220, and then allocate our benefits accordingly. All right, so now what we want to do is we want to allocate the complete salary pool, or I'm sorry, the complete benefit pool, this 2760, by the complete salary pool by program. So again, I have to come out here, I have to create these percentages, and then take those percentages and apply them against the benefits, right, until I come up with what I would categorize here as the benefits by program that were derived against the salaries by program, right? And incidentally, also worth noting here, and the reason why I have this highlighted in red, is you'll notice that when I did this in Excel, this actually ended up with an extra penny, right? So 88 plus 13, right? So that would end up with an extra penny there. So Sage Intacct will obviously handle that from a rounding perspective, so you don't have to deal with any of these rounding issues. And if you're doing this manually, then you started keying these back into a journal entry, you'd have to go find where you went wrong, and the rounding error that you had happening there. So that's a nice little benefit as well. Okay, so now let's go back into the system. and we'll start dissecting the report. So as I mentioned, this report is showing us the before and after implication of being able to apply this dynamic allocation to the salaries and benefits, right? So originally, as I mentioned earlier, we had a shared 999 department code where we booked the 2760 of benefits and a portion of the salaries, which is $5,000. That's the 999 account. And then also before allocations, we had some executive transactions, right? So we knew we had $3,000 of salaries, but also notice that from an executive perspective, all right, and again, being able to look at this with different books allows us the ability to have visibility in separate columns. Now the report will allow you to merge these two columns together. If you want to have that 900 just show up in this column, you can do that. But for illustration purposes, I find it very helpful to be able to show the actual and the allocation entry book separately. And then, of course, down the road, if you want to turn the allocation entries into actual journal entries, you can simply go into the allocation book and copy those entries into a journal, into the Gen journal that will book it into the actual book. So you have that option as well. So let's drill into this 900. And what you're going to find here is that here is the general ledger report that actually booked the entry. See, it's an AJ, right? So the allocation journal, and it was $900. So that's the amount that was allocated to executive, all right, based upon the final allocation we came up with. And we drill into that, and what you're going to see here now is the journal entry that shows that $900, right? So there's a 2760 that we reversed out. It reversed it out of 5123, which is our benefits account, and it booked all of the appropriate benefit transactions, right, on the entire salary pool by program, which of course we got there first by allocating salaries by hours, right? Now, if we want to take a look at the original allocation, it's a snapshot that gets saved on the transaction. This is great for auditing purposes. So right here, you'll be able to do that. You'll be able to drill into the description, and this will bring up the automated allocation snapshot. Okay, so let's just go and make that a little bigger. And now what you're seeing here is the actual definition of the allocation. All right, and I'm not going to go through this step by step. We have a wonderful training program, online system help, and your consultants will help you create these allocations. There's really nothing to do in terms of configuration. It's all really just training. And you can attach supporting documentation to the allocation. If for instance, that spreadsheet that I just showed you earlier, we can upload that here, and that could serve as our backup so the auditors know how we used to do it and how we do it now. So basically what happens here on the allocation definition is we tell the system how we want to treat the dimension. So in other words, what's going to drive the basis. So in this case, we're driving the basis by the department or program code, as the case may be, right? Of course, then we need to tell it what is our source pool. In this case, we were allocating the benefits. So we define that by a fringe benefit account group, and the system will go in and find all the transactions in the fringe benefit account group, all right? We're also filtering that by 999. All right, because what we want to do is isolate within that same GL account only those entries that are unallocated, right? So if we did have some benefits that were previously allocated or just maybe direct posted, it would ignore those and only pick up the 999 coded transactions. This is a best practice on how to isolate transactions for allocation purposes. You also have the option, if you want to allocate a portion of the benefits. In this case, we're allocating 100%. All right, now we got to figure out the basis. So the basis is basically saying, all right, how do we want to allocate it? I want to do it by salaries, by program. All right, so we stipulate that we want to do a salaries account group. And then that salaries account group is going to be for the current month, and we're going to do it by program. All right, and then and the reason why it knows it's by program is because of the dimension treatment up here. And then of course we just target the entry at the end of the allocation definition. All right. Now you do have the option to do various true ups. All right, so this comes in handy if you made some changes midstream. You can set the allocation up to run again, and it'll just either reverse out the prior allocation or it'll only pick up the entries that occurred between the last time you ran the allocation and the next time. All right. So really nice to be able to have the allocation snapshot there. You can have visibility into the dynamic splits that were allocated. Here's all the various percentages that were created or that were calculated dynamically by taking all of the salaries by program. Okay, and if you were to bring up my spreadsheet here, you would notice that they're all coming up pretty much the same, right? 20.38, 20.38, 6.793. There you go. Exactly mimicked what we were able to do in Excel there. Okay, so let's close that. And now over here, we also have, as we're going across here, we have the administration. So the same idea happened there. We had some administrative salaries. And then once we allocated all the salaries out by hours, the portion of benefits that went to administration was 1,200. But then for research, policy, education, and publications, we didn't have any salaries, right, prior to the allocation. So there is no before. It's really just a zero amount that would be showing here. But we do have an after, and the after is going to show both the salaries and the benefits, right? So we already saw the snapshot for the benefits. If we look at the snapshot for the salaries, we would simply just drill into this 1875, right? And now this brings up the journal entry. Again, it's the allocation journal, so it's booking to the allocation book into the 5121 salaries account. And now if we drill into the 1875, you will find that here is the entry where it reversed out the 5,000, right? So it reversed out the $5,000 and then reallocate it based on the percentages, right, of hours, okay? And if we want to get to that snapshot, again, we just click on that little link there, and here's the allocation snapshot. All right, so same idea. We have to define a treatment, a source, a basis, and a target. So the treatment in this case, again, is just going to be mostly department, all right, is where we want to focus. And this time we're going to use salaries as our source pool. That's what we want to allocate. But in this case, the basis is now statistical, right? So it's not financial, it's statistical. The benefits were based on financial, right? They were based on actual salaries. The basis here now is going to take the salaries based on statistical. And of course, that statistical is the hours, right, that we brought into the system, all right? And of course, we're going to target it when it's all done and complete. The dynamic split, all right, is of course these percentages here, all right? Incidentally, if we look at our statistical account, all right, we would have something over here like hours worked, all right? So the hours worked is where we would book those entries, right? So if we went ahead and looked at that transaction there, maybe we just do a little custom report filter here and go 010120 to 013120, and just do a quick view. You'll see here that we booked all those hours in there, right? So there's the 160 hours that were booked by the various programs, all right? And you could show that column here in settings if you want to show the program value. You could show that here as well. Let's just go ahead and close that. Let's go back to use our favorites here, go back to our controller dashboard. Okay, so what you're able to see here is the true benefit of being able to allocate your transactions after the fact based on something that you don't know how it's going to end up until the actual activity occurs. So it's really considered a periodic allocation rather than the transaction allocation that we talked about earlier. So we had to wait until our hours were booked. We had to wait until our salaries were allocated by hours, and then ultimately we were able to allocate both. Now the way we did this is we tiered it. We leveraged what we call a group. So over here, I'm going to use let's go to General Ledger, and I'm going to go over to, we already talked about definitions. Let's talk a little bit about groups. So over here on the group, I created one called S_B, so salaries and benefits by program department. All right, and what I did is I basically queued this up to say, all right, when you run this, I want you to run it as a group, and I want you to run it first. I want you to run salaries by program for me, and then when that's done, I want to allocate the benefits. All right, and I'm also going to say stop if a group member in the sequence fails. So all that means is that if something happens, perhaps I couldn't find a particular value or something tripped up the allocation, it wouldn't proceed into the next allocation unless the first one completed successfully. And in fact, you would literally receive an email notification if it didn't complete correctly. And that's what I did here when I was testing. So it told me that it was unable to allocate the first phase of my group allocation, and it told me why. I couldn't find the source bound. So I went out there and I discovered I was pointing to the wrong GL account, and I fixed that, and then I ran it, okay? And then all that's going to be also stored out here under the log. All right, so whereas I took you to the top level before, which was just a report, You're also going to have the ability to have it in a log. And you'll see here, here's the group, and then you have like the children, which are the actual allocations. So the one at the bottom is the one that runs first, and then the next one is the one that runs in succession, right? So it'll always go top to bottom, the one that it ran last most previously. And you can view them from here as well, right? So you can get to those journal entries and view them from here as well. Okay. And again, getting back to the journal entries and being able to leverage, collaborate, and all the great, basic core functionality that's available within Sage Intacct right off of the allocated results. Okay. There's a lot of different things you can do with these allocations, not just allocate benefits by salaries or hours by, or should I say salaries by hours or something along those lines. You can do things like allocate rent by square footage. You can allocate gains and losses if you have an endowment. You can do that by unitized measurements. Maybe unitize your endowments by um, how many units does it hold in the endowment pool. You can do it by individual employees if you want to do it that way. Um, Maybe you want to do release of restrictions, pull down the revenue, or should I say, release it from temporarily into unrestricted based upon the periodic expenses that are taking place against those programs and grants. So there's a lot of things you can do here with this allocation engine. Um, Pretty much, if you can do it in Excel, you can do it within Sage Intacct and utilizing dynamic allocations. So to wrap this up, I'll take you back to the PowerPoint. What is the benefit of having dynamic allocations working for your organization? So in essence, it helps you reduce errors and headaches with complex allocations, right? So you're no longer needing to rely on complicated Excel spreadsheets, and that can become error prone, quite frankly, when you're trying to determine how to allocate your costs, your overhead, your revenue, and so forth. Eliminating manual processing. So, as you can imagine, creating these spreadsheets could take a lot of time. Even running through the periodic process in and of itself could be very time consuming. So, not only eliminating hours, but eliminating days from your close cycles. Allocating actual costs in real time, right? It's all about having access to real time information in real time, right? So, it gives you that ability as well. Gaining insight into the full costs and improving your decision making, right? So I always like to say it enables you to reduce the task and increase the tactical. So more about strategic thinking, strategic decision making, having real-time access to data, fully loaded, basically across your programs and so forth. And lastly, and equally important, if not the most important thing, is increasing consistency and auditability. So you just saw that you're able to attach the allocation snapshots, right, to the results, and auditors will have full visibility into how you derived your allocations and how they ultimately processed. So full backup is available. Okay, so that concludes my presentation. I hope it was helpful and you found it helpful, and we hope to see you utilizing this functionality sometime in the near future. Thank you very much.
Thank you, David, for explaining and showing how dynamic allocations can help our audience get a true picture of their performance with fully automated allocations. As a reminder, please type your questions into the Q&A box on the console. We'll be responding to questions that we received today on the Sage Intacct community. Please give us a few days to respond and look for them in about a week. If you aren't able to get your questions in before the end of the webinar, you can always feel free to reach out to your account manager or email us at customerforlife@intacct.com. If you're interested in learning more about dynamic allocations, please reach out to your primary point of contact for Sage Intacct. Thank you for joining us today. We greatly appreciate your choosing to spend this hour with us, and we hope that it was time well spent.